when I discovered Bitcoin, I said, this is digital gold on a big tech network. And so not only was it a solution to the corporate treasury problem that every company has, but it's a solution to every individual family or institutional treasury issue. And the fact that it was a big tech network, an open monetary protocol, meant that it was the next cool chapter of the mobile wave. So I mean, I had a lot of passion for digital books and digital education and digital maps. And when I saw digital property, I thought this is the next big thing. So then we just got drawn into it, right? And first we did a $250 million purchase. Then we did a Dutch auction, and our shareholders left us with $175 million more dollars. So I didn't know I'd have the $175 million after the first $250 million. I didn't know that until 20 days after the Dutch auction was announced. So after we had that, we did the second purchase. Then the stock traded up. We ended up with a lot more money. The business was doing great. So we did a third purchase. Then we went to the bond market and we offered $400 million in convertible bonds. And the company stock was trading at the high for 10 years, $300. And we did the bond offering, and then it was upsized because there was a lot of demand. So then we did a $650 million purchase. And then Bitcoin marched up. I think we did that at 20,000, and Bitcoin went up and our stock went up. And then pretty soon we were trading at like eight times what we had been at 4 months ago. So we were able to do another financing, and we did $1 billion purchase. So then after that, we were able to do a $500 million debt offering at 6 1/8% interest. When the dust settled, we had raised $2.2 billion in debt. And through the Dutch auction process, we had another 400 million in equity plus another 100 million. So we found a way. We found like 2.8 or 2.9 billion dollars we didn't know we would have, and the debt was borrowed about 1.5% interest rate. So if I had put out a press release in June saying I want to borrow $2.2 billion for 1% interest to buy Bitcoin, that wouldn't have happened, right?
Right.
If I had gone to the board and said, that's what I want to do, they would have said, you're crazy. That's not going to happen. So we kind of worked our way into this because of a fortunate set of events, a lot of macroeconomic tailwinds blowing in our favor. And then every time we had an opportunity, we seized the opportunity, so fortune favors the bold, right? I think inflation is a vector. And so it's not one number. It's not a scalar, and you can't use arithmetic. If you want to be simplistic, you say inflation is CPI or PCE, and it's one number, and we were targeting 2%, and now it's 4 or 5. But that's not the way I think it is. I think it's an n-dimensional vector. So, for example, I think the inflation rate in single-family homes in the U.S. is 25%. I think inflation rate in equity was 38%. The S&P 500 index is up 38%. The cost of buying a share of stock in a company is 38% higher. So if you look at asset inflation, Bitcoin's up 270%, NASDAQ is up 40-something%. There's no inflation in gold, that's flat. Real estate's up 20% or more. You can find a market basket of things called CPI that are only up 5%, and you can say that's transitory. It's irrelevant whether it's transitory or not. If I keep track of a list of things that you don't want to buy, and I tell you that the price hasn't gone up, what does it matter whether the price went up or not? The question is, what do you want to buy, and what price is it going up? And I think the price is going up at a different rate every month in every different place in the world and every different cohort for 1,000 different products, services, and assets. And, that if you understand that, then the best surrogate for an investor is the monetary inflation rate. And the monetary inflation rate is somewhere between the M2 money supply expansion and the S&P index. Take the S&P index, 38%, it's up, and then subtract 3% risk premium. And you could say there's a 35% risk-free hurdle rate. That was the rate at which the currency devalued, right? The dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So you know, and it was when it was going up 10% a year, it was inflating at 7%. I think the money supply expands at 7%. You tack on a 3% risk premium, that gets you 10%. That's normal. And we're like triple normal, depending upon, you know, what your reference point is. And if you're taking monthly averages or quarterly averages or daily averages. I think that the Bitcoin network is reorganizing, distributing. A lot of people that own Bitcoin in China had to sell it in a hurry. So they had to take a haircut in order to liquidate their Bitcoin and convert back into RMB. And that caused volatility in the market. I think that the Chinese exodus, it's a tragedy for the Bitcoin miners in China and Bitcoin holders in China, right? I feel awful for them. I think it's a mistake for China, the country. They're going to lose $1 trillion. They're giving up. They had half of the mining industry in an industry that's growing 100% a year, and they gave it up. I think that the result is the Bitcoin network will shift to the West. It's a benefit and a windfall for the rest of the world. It's good for Africa. It's good for South America. It's great for North America. It's an opportunity for progressive miners. It's an opportunity for progressive politicians and political jurisdictions. Texas wants the mining. Why wouldn't you want the mining? This Bitcoin mining is the highest value and use of intermittent or stranded energy of any industry in the world. I see a lot of on-ramps for Bitcoin getting wired. You know, you've seen this, the strengthening of Square and Coinbase and PayPal. You see NYDIG doing really good work to wire up a lot of community banks and traditional institutions to Bitcoin. You're seeing the bigger banks, Goldman Sachs, you know, and Morgan Stanley and others getting involved. The Bitcoin derivatives market is growing. Companies like MicroStrategy, or you could think of us as, you know, we're in essence, we've created a stock, which is a derivative, convertible bonds that are derivative, secured bonds that are derivative. The key is to create this channel between the ocean of conventional, traditional assets and this crypto pond, if you will. Right. And then there's a channel that is carved, and a lot of people are doing really good work in order to carve that channel to normalize expectations, and it just takes time. So I think that as time goes by, there are just more and more ways to buy Bitcoin and buy instruments and financial products that are backed by Bitcoin. All of those are going to create more demand for the underlying asset. And as that demand builds up, then, you know, you would expect the price will continue to appreciate, because the macroeconomics are very favorable, right? We know we're going to continue to expand the money supply in dollars and euros and everywhere else in the world. The technology dynamics are very favorable. We keep improving Lightning apps, Square, Cash App, mobile apps. You've got these, like BlockFi's got a credit card and it gives you Bitcoin as 1.5% cash back. Call it Bitcoin back. So all those things are rolling out. And as those things roll out bit by bit, the entire asset class will just get more energy flowing into it. So, you know, as I said, that, you know, the best thing to do is if you're not going to hold it for 4 years, don't buy it at all. Because if you're thinking shorter than 4 years, you're kind of more either a trader or a speculator. The best period is forever. And if you can't be forever, look out 10 years, and then you won't have the anxiety. Make sure you get the staying power, and don't get yourself in a situation where you might get forced liquidated on a 20 or 30 or 55% downdraft. Because the key is, it's like, you know, if you could buy 50 blocks in Manhattan 200 years ago, there's no way you wouldn't have made money unless someone called your loan and liquidated you out and you had to sell it sometime in the last 200 years. So you just want to have the staying power. to stick around for the long term and let nature run its course.